Hi, everybody. Hope you're doing well. Today, we're going to cover the NASDAQ-100 or the QQQ for the week of June 7th. For brevity's sakes, we're just going to call it the Qs. But let's just jump into it. So who's Prep to Grow? So Prep to Grow is an AI big data platform that predicts how companies will perform and will that performance impact their stock in the broader market. And then we aggregate it up. So in essence, Qs are made up of 100 different companies or so, and we track the performance, and we're able to predict how the QQQ will perform on a weekly basis. So far, I've been really accurate. If you go to our site or videos, you can check it out just in terms of accuracy. I don't think we've really missed a week around what's occurring, or even our weekly predictions for how earnings announcements will go for specific companies. So that's Prep to Grow. We are not a financial advisement. We are a platform that gives recommendations for folks to make their own decisions and apply their own strategies for stock trading or day trading. Prep to Grow is going through a seed round, and if you'd like to invest, we'd love for you to participate in this and become, an investor and part owner of Prep to Grow. This is our website below. If you have any questions though on this, you can always reach out to us at contact@preptogrow.com. So let's just jump into the week or this current week and what happened. We were predicting a bull. It was a little volatile throughout the week. There was a pullback before jobs. There was news around interest rate or inflation rates being really high. So the market got a little scared. We talked about this the week before about, all our investors a little sketchy about the market. Generally, yeah, they're worried about coming out of the recovery and what's going to happen. And that's conditions. So this week, it is up. It is up about greater than a half a percentage point this week. But to us, that's not a bull. That's flat. We have had 2 weeks of back growth, and that is what we projected to. Essentially, we're entering into a three-week growth. We're into the second week of that 3-week growth or bull cycle. Next week will probably be the last week of the bull before we start to get into a little bit of a bear, and we'll talk about that in a second. Today at our projections is a 36% growth. Week over week, it's dropped a little bit at 3%. Growth being corporate growth. How are they growing? Are they doing well? And what does that mean? So 36% is actually really good. It's in alignment with where the growth rates are for the QQQ and what is some upside around that. If we look at the analyst expectations, they've dropped a little bit correspondingly about 4% their week previous, and they're expecting 29% growth rate for their earnings per share. If we look at the graph to the right, there's still a lot of room to grow. The bottom graph, which is kind of what is the stock delta between current stock price versus where the projections are the stock is going to go. So there's about 11% upside. So this 11% upside doesn't happen next week, right? This is a long-term growth rate that will happen over the next potentially 52 weeks. So we expect that there's going to be good growth in the Qs and the underlying NASDAQ-100 companies and the ones that kind of fall outside of that. But continued solid growth. Qs are looking real good. So let's look at next week, for June 7th. Flat to a bull is what we're projecting. We're expecting it to be up, but it's a cautious up. Just because that's still the generousness of this week. But with the jobs reports this number, certainly people are very excited about what's to come. Good signals, good signs with the open economy and the jobs. Another great sign is that the non-Qs or the non-NASDAQ 100 companies outside of that, the folks that purchase the S&P 500, the jets, the gas companies, so on and so forth, their growth is outpacing their stock growth. So there's no longer a bubble that we saw at the beginning of the year. It's looking like there's some room to grow there as well. A couple of caveats in terms of caution. Inflation is very high. It's 4% versus 0.4% last year. So it's high, weirdly high. So that's a big caution about growth and opening up. Earnings season over, which means then there's this kind of funky dead period where there's just a ton of flatness, right? Earnings seasons is where most of the gains occur day over day. Outside of earnings seasons, it's flat, right? It's completely flat most of the time. So don't expect a lot of movers that happen. You'll have volatility that's tied to market indicators and some of the leading indicators of what's projected to come out. So expect some volatility, but don't foresee really any big jumps until the next earnings season. And that's historically always happens. Stimulus is ending. That's not great. Expected to end in September timeframe for unemployment and for general stimulus for keeping the economy coming out of the pullback from last year. What does that mean? Is there going to be more bankruptcies, people coming back to the workforce, or higher employment rates? We'll have to see, but that's a big red flag with about 3 to 4 months to go. And what does that mean? I think that's really helping to fuel the jitteriness of, or at least the data is showing that this is causing more of the jittering within the market itself. We still see a lot of bear versus bull, or bull way out passing bear signals, more volume in the bull signals than the bears, more signals, more trades, so on and so forth. So a lot of positiveness within that data. So there's good things there to see what happens. Again, this week, flat to bull. Flat is more of a caution just because of generous, but really we think we're going into the third week of a 3-week bull. So where we're at in terms of what's going to happen over the next 30 days. We've seen a couple shifts over the last 3 months, right? So we went into a bear. There was a pullback in May. We saw that happen. If you notice that the chart down below, or the time frame down below, is April. When in April we predicted a May bear. So really these are predictions on where the market's going to go and the signals and when pullbacks occur. And so far we've been very accurate with this. And these signals are really forecasting out 30 days, which is about the average time prep to grow recommendations, at least for stocks, make a return. It's over 15 days, but really we have some line on it as well for ones that we don't recommend. So May bear, we predicted that. There's a June bull, which we're in right now. It's about a 3-week. Next week should be the third week of that. And then we start to see some flattening, and then we start to see a bear starting in July. So next week, flat to bull. Week after that, flatness, and then signals as of now looking like another bit of a pullback. So we'll see, but that's our 30-day forecast. Again, third week of a bull, starting to look like maybe a small pullback in July. Who's announcing next week? Super boring. I mean, Marvell is not even in the QQQ, but they're only interesting one. That's a high-tech company that's announcing, so we're going to cover that. Last week we talked about Broadcom, Splunk, Zoom. Splunk is the one that we have on our site as our recommendation. They did exactly what we thought they were going to do. They missed earnings, not revenue, but their earnings per share just not looking good. Their profitability is not looking good. They have some internal challenges around, or customer challenges around going from on-prem to SaaS. And if you're in that space, essentially means that on-prem means that the company itself hosts its software. It's on their servers and their environments. Cloud means that Splunk hosts it for them, and they manage everything for them. But not looking good from that perspective. And they're not showing any signs of really attempting to break through that. So while revenues are up, the profitability is way down. Revenue is going to take a hit if they don't start to have some signals of growth. So Splunk, half their price over the last 6-7 months. Not a good investment. Stay away from it unless you want to do short side, although it's really, really low right now. So just a lot of caution on Splunk. This week, Marvell. Again, it's not a Q company, but they're interesting. And they're the only high-tech announcement coming up next week. So let's jump into Marvell and see how they're going to do. So this is the Prep to Grow application for our subscribers in there. If you want to see the Qs for that we're recommending, just type in QQQ in the search field. It'll return everybody that participates in the queue and what we're expecting to do around that. It could also do for Jets or whomever, so on and so forth. So if we want to see who's announcing for the week, if you're a subscriber, just go to Filters, spool down to the bottom, make sure filters are appropriate, hit Who's Announcing, hit Apply, and then you'll see there's really not a lot of announcing over the next 3 weeks, at least what we're recommending as of today in the last 7 days. So Marvell is the only one. So let's just jump into Marvell. Marvell, we've been tracking them since 2013, and they're announcing their Q1. They're based in the Bay Area, Silicon Valley, at the heart of it. They have, I've been there. They've got good people working for Marvell, long tenures, which is always a good sign for companies to have long tenures. They have fundamentally the best corporate lobby I've ever seen. It's straight out of Vegas, right? If you go to Vegas, you see these big, huge lobbies with marble and fancy furniture and leather and brass. It's an amazing corporate office. I've never seen anything like it before. They've got massive fish tanks, very exotic fish. It's an amazing corporate lobby. Their offices aren't that great. It's kind of a facade, but it is a connector company, so they're pretty cheap because the margins are small. But their lobby's the best I've ever seen. Marvell's in the chip business. As I said, they do networks, communications, data storage, and other consumer products. If you have a handheld device, chances are there's probably a Marvell chip in there. Growth-wise, Marvell is doing good. Second highest growth rate that we've seen them have since 2013. This is a kind of a continuation from the pullback of last year. First highest was right before that occurred, so 2020. And they've done a very good job of recovering. I think in 2018, 2017, they weren't looking very good. They were really on the cusp of losses and revenue declines. But they've made an exceptional turnaround since then. They're looking very good. Only caveats is that chips are in shortage. So will that impact their earnings? Maybe. That's a caveat around our projected earnings for them, and the algorithms are kicking that out as a warning sign. But generally, the algorithms are cautiously optimistic about what's going to happen. So let's take a look at them. So oddly enough, Prep to Grow will recommend puts and calls for the same company within a short time frame. Sometimes we have longer projections, and sometimes we're playing short volatility. So if you look at the unusual option activity for both of these, this one, let's just dig into this. Let's take a step back. So the Marvell's earnings announcement is on June 7th, 2021, which is Monday, which is an odd day to announce. But you should take earnings with a grain of salt in terms of dates. They always change. May change the day before, may change today, but right now it's targeted for June 7th. But timings are highly unpredictable based upon public data. So this is a put that we recommended. We have a really high success rate around puts. Our predicted stock price for Marvell was $45.95, which they went down, and we made a quick momentum play for a put on Marvell here. And it sold with a quick 15% gain on June 2nd, which is Wednesday, I believe. This was a put for the July 16th option, 2021. Unusual option volume was here. It was 1.21, so certainly something that we flagged and raised up for subscribers to take a play off of for a put. The strike price was $45, and it was a quick turnaround. If you look at the pricing itself, certainly this is the dip that we played here. I don't think that's the dip. This is the dip that we played into this week. Went down, came up, and that's where we're at. So got a quick in and out. We are projecting that Marvell is an upside, and this was purely put momentum play. But even with an upside, as you can tell by the moving averages for Marvell, the current price is 47, 5 days is 48, 20 days is 45, and 200 days is 44. They're a slow growth company. So we do project an upside, and I'll cover that in just a sec. But they don't have a lot of rapid movement lately. If you look at their 52-week range at 25 up to 55, they do have upside. We are projecting that they're probably going to get up to about this range. But it's slow. It's a chip company, not incredibly market driving company, or not like a Facebook or Google or something like that, but slow growth expected for this. And this is I believe, was this a call? Yeah, recommend them as a call. We're better at predicting when Marvell is going to go down than up, but we are pretty good with the success rate over the 12 months. Just 5 days is 47 out of 54, 47 out of 56 for the 30 day. Just note, if you're a subscriber, this is a very good indicator if you should buy or not. So anything greater than 95% for an option, either the 5-day or 30-day, is typically ones we're going to buy into and recommend to our subscribers. If you look at Marvell, we recommended more puts over the last 12 months than calls. 232 out of 251, so very accurate around this. Just note this is 12-month of history. Every prediction we make is an actual. So for that given day, we say this is the price target for that day. And then we track it until it hits or misses. And so we missed 19 times out of 251. So we have very good accuracy around Marvell for puts. Calls, we don't make a lot of calls. We're okay with them. Certainly, we also recommend Marvell as stock, so this would be a stock. Our price target for Marvell is about 49 in terms of upside. So if we look at the put and the call, probably somewhere in between about 47. The analysts are at 55, so expecting to go back up to the 52-week high. But again, Marvell is pretty boring. These guys from May 24th, 2020 had a lot of unusual option activity for this. I think it was like 3.68. So obviously this was when it was open. When it closed, it was slightly different, or it was 515 to 665. But when it closed, it was 3.28, 3.68. So it had a lot of unusual option activity. But again, Marvell, we think they're going to have a good quarter. Again, cautious on the technicals and cautious on the chip shortages and cautious on that Marvell is typically a slow stock price increasing company. So recommend more stock than options just because of the timings around that and just the time decay that it acts for options unless you're doing long options. But Marvell should have a great quarter. Let's go back to the slides and close out the week. Again, Marvell is the only one coming up next week. There's very light earnings over the next 2 to 3 weeks. So we'll come up with some that are either within the NASDAQ-100 or maybe another ETF. But again, next week, we're into the 3rd week of a 3-week bull. We're going to flatten off, not next week, but the week of that, the week of June 14th. And then predominantly looking at a bear pullback the following week of the 21st. At this point, there's some signals around that. But again, 3 weeks out, bull next week, flat, then bear. Hope this has been helpful. If you have any questions, always feel free to reach out to us at prep2grow, contact@prep2grow.com. All this material is posted on our website. The link is in the description. Again, hope you have a great week of trading, and we'll talk to you next week. Take care. Bye-bye.